What's going on, everybody? It's March 23rd, 2023. I'm going to do a review over today's price action and then everything that unfolded. So yesterday we left off how we should expect lower prices today in ES and the other future contracts due to the fact that yesterday we closed underneath this order block here, turned into a bearish order block. I told you guys to extend out this March 9th fair value gap. This can act as a point of resistance, kind of telling the story if we break underneath this or close underneath it. This will tell the story if we continue into these lows here. To me, this is a trend line phantom, meaning that a lot of retail or trend line traders have a lot of sell stops resting underneath these lows here. So to me, it indicates that we should look for lower prices. Admittedly, today, I didn't expect this large of a retracement. And I'll dig into that on lower time frames and what my procedure was as far as today, and kind of how to navigate when your overall narrative or bias is one way and then price is not showing that or indicating that to you. So if we look at a 4-hour time frame here, don't mind some of these annotations, but there was a 4-hour Sibian here, which the body closed underneath it. That's telling the story. Small balance price range in here. Extend that out in time to your right. Off the backbone that yesterday, we retraced up into this balance price range up here, the daily balance price range. So we know that price is wanting to go lower. At one point in time, this was fully bullish, which my analysis, I couldn't get a read on it. So what that meant for me is I need to sit on the sidelines and wait for more information. If we dig down to the 1-hour time frame, we had a Sibian here, retraced very, very deep. Now, if you're just looking at the dealing range from this dealing range high to low here, retraced up into a premium. Okay, equilibrium's there. Traced up into a deep premium, which I did not expect, and that's perfectly okay. You're not able to predict all of these things. But the most important thing is for me is I was holding a bearish bias the entire day. Now, that does not mean I was taking shorts in here because there is nothing signaling me to go short. And I don't want to go against my bias and go long. Now, there are situations and times and days where I can do both sides, and so can you, but there's rules and things I like to follow, especially on days like this, where I'm expecting some sort of big range day. I'm expecting some type of downside. And I would rather be in that move than try to catch the opposite move and potentially get caught with a loss because I was searching the other side and trying to be an all-star. Sometimes it's best to play just the overall narrative and the overall play or bias of that day and what you hold in your mind from a daily time frame standpoint. Like I said, I didn't expect this large of retracement. I don't think anybody did. Anybody that says that they did, I highly doubt that they thought that pre-market. There was a 15-minute bearish order block in here. We ran all the way up into the premium end there. So like I said, it's not much use to me. If you look at a 5-minute time frame, we were coming into the session and I was looking at this high here and I was seeing if price could dig above this high. There was a 5-minute Sibian here, and I was seeing from this point, can we start to see bearish prices? I wanted to see lower prices. It was also off the fact that if you go to your regular trading hours RTH chart, we opened up in a premium. So I was looking, this is the 5-minute Sibi there. I was looking if we could displace lower from there and then close in the remaining portion of that opening day gap there. So nothing in there was signaling me to go short. Now, could have I went long? Yes, but like I said, I was leaning on the idea that today I'm just going to stand on. I just want to look for shorts, and if I don't get that, nothing signals me, then I'm not going short. But in here, I want to annotate how we ran above the buy side liquidity, came back down into a bullish breaker. This last up close candle in here, we have a low, a high, a lower low, then a higher high. So that is a valid bullish breaker with a fair value gap in here. These are one of my most favorite entry patterns. When you have a fair value gap that's coupled inside of a breaker, ICT's mentioned it plenty of times before. It's like a launch pad for price. Breakers are beginning to be one of my favorite entry patterns, at least PD arrays. I think they're absolutely beautiful. If you trade breaker to breaker, it can be a phenomenal entry pattern. ICT posted on Twitter, believe last week or on Friday, breaker to breaker entry patterns. I think they're fantastic. So I think the 3 minute as well was really clean looking in terms of price action. So this last up close candle there, we dig down into that fair value gap in here, IOFED it, and then we expand higher. Once we reach into the SIBI here, like I said, all this in hindsight is easy to say, yeah, we should have bought this. But in the real moment of time, which is the reason why you need to record yourself and you need to record your thoughts and what you're thinking throughout the process, or at least try to remember them, because hindsight bias is a bitch. And if you let that get you down, you have to understand that you have to stand on certain rules and certain, protocols. And if it doesn't show you that, then it is what it is. Nobody expected this. And if you did, then congratulations. But for me personally, I didn't expect this large of a run, this deep of a retracement, due to the fact that the 4 hour SIBI, the 1 hour SIBI, all those were resting over here at that point in time. I was expecting price just to utilize those, then to drop price lower after taking out the buy side liquidity, return into the regular trading hours opening gap. That was my idea for the morning session. Now, I'm not trying to force any of this. When I'm looking at a 1 minute time frame, I have other things annotated, of course, but I'm looking at a 1 minute order flow and I'm seeing if we can displace lower. But there's nothing in here for me to go short, nothing signaling me to go short. There's no shift in market structure. For me to really like shorts, I would have needed a break underneath that low there. Even at this point in time, we went above the buy side liquidity. I wanted to see if we would invalidate that breaker. Like I said, in hindsight, yes, buying it is a fantastic entry pattern, but it didn't align with what I was looking at. So I discarded it and I was just looking at it as a validation or invalidation point. If we broke underneath that bullish breaker, then to me, I would start looking for shorts, not to be looking for lower prices. It was very high resistance liquidity run today, very sloppy, very slow, lethargic delivery. Even if today was, if I went long, it still wasn't optimal. I still don't enjoy these times. You can see here after we broke above the buy side liquidity there, trace back down into a bullish order block, bullish fair value gap in here, which I will show at a later point for the PM session. This becomes an inversion level as well. Drop down into a fair value gap in here, bullish order block there, expand higher. And then we're just chopping around in here. And there was a couple other levels that ICT was mentioning, and even myself, I was looking at, I believe the 5 minute time frame. There was a fair value gap in here, using as a draw on liquidity, not using as a short bias, but looking at price and saying, okay, where's the next level that we could draw to? So here was the level. And then I was looking at this reclaim fair value gap that we used yesterday on FOMC to send price lower. I was looking at to see if price could drop into there. I'm not looking for shorts. I'm just looking at these areas of interest as a draw on liquidity. I'm not looking to go long because my overall bias is bearish. And that's why holding that idea closely to you. And if you don't get that, then you just sit on the sidelines and sit on your hands. If you are willing to do anything and willing to buy, you're willing to sell, you'll fall for anything. And you'll become lost in these markets if you are not standing on that analysis standpoint of what I'm looking at overall. So if we look at lunch hour here, so lunch hour started right about here for me. It's 11 a.m. And then I go all the way out to, you can even use 12:30 or 1:30 New York local central time. Usually this has a lot of volatility that comes into the market right about 12:30 my time central, rather than looking at the window of 11 to 12 or 12 to 1 New York local central time. I'd rather look at it from this standpoint. Just gives a little bit more breathing room. And even though in here, there was a couple entry patterns and places that we could have went short, and I'll show that. To me, it was letting price prove itself to me. It was letting it prove that, okay, this thing actually really is bearish, rather than guessing or trying to force it. I was letting price prove itself because there was still a 5 minute BISI in here. There was a 15 minute BISI in here. There's a 30 minute BISI. So like I said, in hindsight, it seems very easy, but in real time, you need to record and analyze what you're thinking, what your thought process is. Because at this point in time, it's hard to determine that, okay, we're going to run all the way down into here. You need to wait for further information and let price prove itself to you. So look at a 5-minute time frame. This is hindsight. 5-minute fair value gap in here. Stretch that across, balance price range, 5-minute bearish order block in here. This last up close candle, we dig up into the wick of that, the CE of it, and then we displace lower from there. We actually dig up into the body. If you look at a 1-minute time frame, as well as monitoring as well, these relative equal lows, seeing if we could displace into that. Mitigation and block in here, these last two down close candles. This becomes an inversion level. Stretch that across. This BISI now becomes inversion because we broke underneath it. And now we're respecting this SIBI in here, retracing to a premium, dumped lower, sell side near. And I'm going to play this out to where I entered into the market. So remember the time, 12:30, my time's right here. Now, I was looking at this because I was on the charts prior to 12:30. I was just getting on about 12:10, 12:15. Saw this 5-minute fair value gap in here, and I was looking at the lower time frames. I was looking at a 3-minute, I believe. And I was telling myself I was willing to enter into this if it did reach up into the area I was looking at. So I was looking at this last up close candle right here. And I was looking at this fair value gap from that low to that high there. And then this box, let me remove this one. This one right here is the 5-minute fair value gap. So there's a few confluences. I was seeing if we could dig up from that dealing range high to low there. That would be a premium. I wanted to see if price could dig up into there. I was willing to go short at that point, but we did not get it. We displaced lower, which again, a lot of this is psychological too, because if you see moves like this, and especially when price is moving this quickly, it can induce a lot of FOMO. It can induce a lot of emotions and things that will come out of you, characteristic, traits. For me, I don't really care because A, I know this thing repeats all the time, every single day. B, we haven't reached down into the sell side here, nor have we reached into that low there, which were my overall targets. So I'm perfectly okay with quote unquote missing a move. Talked about this fair value gap here that we used to go long is now an inversion level. So as soon as we break underneath that, we left a fair value gap here and one above it. Now, I'm going to take your attention one more time back to this 5-minute fair value gap resting right here. So I'm going to make this a different color. So if I go back down into a 1-minute time frame, orange box is that 5-minute fair value gap, 1-minute SIBI in here, 1-minute SIBI in there. Now, today was a great example of how letting your stop loss do its job, paying it to do its job is going to help you far more than exiting out of the trade prematurely due to fear of losing. And I will go over here. For some reason, I can't get my executions after the day is done. So this was the screenshot. So I'll try to walk it play by play. And here I was scaling in with micros. I'm usually dropping 10 contracts overall, which is just one standard E-mini. So I went short here, 5 contracts. The reason I did that is because if we did just displace from there, I was perfectly okay with the risk. I saw we punched up again. I sold short 3 more contracts, and then I had one more time inside of this SIBI here, which aligns with the 5-minute, to go short one more time, which is what I did. And then we saw displacement lower, price break lower here. And then I went short one more time there, 39.9750. Reason being is there's a inversion level right there. And if we go out to a 15-minute time frame, at this point in time, price was retracing into the bottom end of that bearish order block. And price, if you're looking at a 1 hour, 30-minute, it looked extremely heavily bearish. You can see here, and maybe that's just time and experience, but the way price was looking was it wants speed, it wants to move quickly. And there's no other way to describe that other than experience, but to me, it looked like it really wanted speed and it wanted to break lower. So to me, going short at that area, which is the 15-minute bearish order block, I was already peeled out here. I already took off 5 contracts. So for me, I already took partials here. Stop loss was moved to break even. I went ahead and went short one more time there at that bearish order block. Let me move back down into a 1-minute time frame. So that orange box there, that's the tail end of that 15-minute bearish order block. Leaving a fair value gap right here, which I was on ICT's live stream, and he was mentioning how if price digs up into there, that would be a shorting opportunity. Now, regardless if it was ICT or I was just by myself, I would have elected to believe I would have went short again, because, like I said, this all comes from a standpoint of a daily time frame narrative. So if I'm confident in that and I'm confident that's going to play out, I'm able to pyramid, especially when we have times like this where it looks extremely heavy, it looks low resistance liquidity run, where price can just have speed. That's where you're able to pyramid. For those who haven't been around that long, pyramiding in and of itself is a skill set. It's something that you have to know when the environment is ripe, when it's likely to do so. So I went short again in there. We displaced lower. I took another 5 contracts off. So it was from up here that I was taking off another 5 contracts. So in total, I believe I had 15 contracts on after taking a partial there. Then I took another 5 off, and then we were sitting around. We revisited this fair value gap again. In hindsight, I wish I didn't peel this off, but I wanted to protect myself, especially with futures. If you guys know, with taking partials, it will move your original entry down and further, depending if you're selling. So my original entry was up here, but as I took partials and I entered in more, it was moving my entry and my stop loss lower and lower. So at this point in time, when we were returning back into the SIBI, I wanted to reduce my risk, which is the reason why you see another buy here. I was closing another partial off. And that way, I only had 5 contracts on. I already paid myself. I was already up almost from even the standpoint here. It was almost over 12 points, 12 handles. So I was perfectly okay with that, paying myself and then leaving a run around to see if we could get expansion lower, which right at this point in time, I basically sold or took my partial and then price sold off. Perfectly okay. I'm not going to go in there and try to, hunt it again. I was content at that time. You can see here, every single time we were making new lows, I'm peeling off. That's called running down equity. So every time price is making new lows, I'm peeling off a position. I'm peeling off something to pay myself, and I'm protecting my position as well. I'm putting stops to break even. And the focal point for me and what I'm looking at, let me zoom out to a 5-minute, which ICT was annotating, was this low here and this low there. Now, I know I'm doing a lot of jumping back and forth, but the regular trading hours, if you go back to that, during this whole point in time, again, we're selling up here, I'm looking at the RTH chart and I'm looking at how we can fill in the remaining portion of that. Okay, so let me go out to this again. So this bottom line, that is the open of that, or the close of yesterday's price. So for the RTH, I'm looking for it to close that in. More importantly, I was looking at that low, which you can see here. I sold off at 39.78, which actually was this low. Right, 39.78 was right here. So I sold off right at that low. You can see here. So peeled off 2, peeled off another 2, and then I peeled off my last one at 39.78.25. So a little bit above that high there. Wasn't too bad. After we broke underneath the sell side liquidity, perfectly delivered into the new week opening gap, which, like I said, everything in hindsight's easy, but I didn't know we were going to reach all the way down in the new week opening gap. It is a target to draw on liquidity. It's something I had on my chart, but I didn't know that price is going to go all the way down into there. And that's why paying yourself, protecting yourself, all these things are crucial. Don't let hindsight bias mess you up, because the amount of times I could have, would have, should have throughout my career. I mean, I can't tell you the amount of times. So after we came into the new week opening gap, I'm flat. I don't need to do anything else. But we did return back into this 15-minute SIBI in there. If you look at the 5-minute, stretch this one across here, returned perfectly back into the balanced price range, which we used multiple times. Then price dumped lower. All in here, this is very low probability to me, due to the fact of how volatile it is. I mean, I think in a 1-minute candle, it moved 20 handles, I believe. Yeah, so I mean, it moved 25 handles in about a minute. And when you're in the type of those environments, I would rather sit out of it due to the fact of how volatile it is, or I'm reducing my risk to a bare minimum. Because one of those candles goes right through your stop loss, disrespects it, takes you out more than what you were at. It's not a good time. It's not something you want to be a part of. So if you see something like that, suspect that price is going to be very volatile, and you really shouldn't be in there. I think the greatest shorting opportunities were in here. Even if you're up in here, that's perfectly fine as well. But that's going to be it, I believe, for today. I think one last thing. I just wanted to touch on the dollar. That's the reason why we were seeing higher prices. I talked about yesterday how we came into that 4-hour SIBI. We were just balancing kind of inside of that for the most part of the day. And then we saw higher prices, which led to lower prices in ES and the other future contracts. So if you look at the 5-minute time frame, this is the CE of it. Moved above it, came back down, and then we launched above the relative equal highs here, closing in the new day opening gap right there. So a lot of confluences in terms of where price should go. I believe that's going to be it for today. And until next time, good luck and good trading, everybody. Be safe.